Cool. All right, so tonight I'm going to go over trading plan development and how to actually build a trading plan with you guys. So this is going to be something that you can use no matter if you trade Forex, stocks, no matter what type of investment, even real estate, because these are foundational principles and just things you have to keep in mind no matter where you're investing your money. So for right now, I'm not going to share my screen or show anything because this is just a time where I want you guys to be able to listen and hear me. And then if you have any questions, you can type them in the chat. And then if you need for me to slow down or repeat anything, you guys can let me know. All right, so first of all, having no trading plan is going to lead you to be a very emotional trader. Having a very detailed trading plan is going to lead you to be a very results-driven trader. So with a trading plan, it helps you to manage your time wisely. If you're going to be staring at the charts all day, or if you're going to devote an hour or two of your time, that's precious time of yours, you need to have a very clear plan, a very clear and concise plan, an objective to what you're going to do, what you're looking for, how you're going to spend your time, and value every minute of it. So with a trading plan, you have to know, first of all, that you're not going to be focusing on the money. You're not going to be worrying about your losses, and you're not going to be worrying about missed trades. Because at the end of the day, whenever you have a trading plan, those things are obsolete. Like, who cares about the money? Like, you care about becoming a very good structural foundational trader. All right, so the very first step is to know yourself. So what does it mean to know yourself? Know your schedule. So I have a chart that I'm going to take a picture of for you guys and put it in the group chat, but I literally start from midnight to 11:59. And I have a grid that's broken up into like 15-minute intervals. And I know for the most part what my day looks like. And if I get to the point where I'm like, oh, I don't have time, I can look back and say, okay, on average, what am I doing with my time? Where can I devote more time towards studying and take something else away? So know your schedule. So when do you like to be up? A lot of people think when they get into trading, they hear people talk about London session and how London session is so amazing. But if you're not a morning person, if you don't like to be up at 1, 2, 3, 4 o'clock in the morning, London session's not for you. And that's okay. But you have to know that. You have to know that you're not a morning person. So the time and price setup. So Mr. Levels teaches the time and price setup. Can you be up for this? Again, are you a morning person? Are you going to be able to see when this is setting up and possibly be able to get in on trades like this? If you work night shift, you might be able to see it set up, but will you actually be able to put the trades in? Again, with knowing yourself, don't trade sleepy, don't trade hungry, don't trade if you're stressed, if you're overworked, because those are going to lead you to be very emotional with your trades. So sticking with time, London session versus New York session versus evening sessions, even like Asian session or Australian or Sydney session. So each session has its own time. Each session carries a currency pair that's traded heavily during that period of time. So if you work 9 to 5 and you say, okay, well, I don't have access like that to my phone, then know that you're probably going to be looking for trade setups in the evening time, which is okay. But you just have to, again, know that about yourself. So your account balance. Know how much you're going to be putting into your account and make sure that with that account amount that you're going to be keeping your risk management in place. The next step is to know your goal. So if you have a $200 account, know the appropriate lot size and set a reasonable account goal. So every trading plan should have a goal. not just for how many pips you plan to catch in a day, but maybe a week, a month. You also need to have even though it's not always about the money, you do need to have a goal in mind for what you would like to hit in a month, for what you would like to hit in a year. So keep that in mind whenever you're putting money into an account, because if you put $100 into a trading account and you're expecting to turn that $100 into millions by December, like just know that you're not going to reasonably get to that goal if you keep proper risk management the whole way through. There are times where I've heard traders say, well, I did it, but look back at your trading journal and see how many losses versus wins you took. Were you really able to keep your risk management in place, getting to that goal? So, questions you need to ask yourself: are you ready to live trade your strategy? So, your trading plan, in addition to it being your strategy, it's your mental setup. Are you ready? So if you've just learned a strategy, you shouldn't be live trading that strategy right away. Always paper trade a strategy that you're learning so that you can figure it out. So it's okay to paper trade. I've paper traded strategies before. I still do, because you don't want to get into a live account with a strategy you're still trying to figure out and risk your real money. Do it on a demo account, do it on a paper account, whatever your broker calls it, and just try it and see how it works out for you, because it may not work. And then you just risk play money. So back to the questions when I asked earlier, how do you feel? Are you stressed? Are you overworked, hungry, dieting even, or and emotionally ready? Those questions are important because trading is a very mental activity. It's so easy to just go and put in the trades whenever you have a set strategy. But if your mind is all over the place, if you work a job and you're stressed, your boss has you stressed out, your kids or your spouse have you stressed out, that's not a good time to trade. You should just sit back and wait until you're mentally clear, because if you're not mentally clear, you'll start getting into trades for emotional reasons. You'll be stepping away from the computer, you'll be coming back, and it's like, oh man, I missed that setup, and you're trying to rush into the trade now. Or let's say you missed your exit and now you're trying to hold on to a trade you knew you should have closed out, but because your boss has been stressing you out about hours and they're like, oh, we're going to cut your hours this week. And you're like, well, I really need the money. So you're just going to hold on to a trade for no reason, knowing you should have been out. Your trading plan told you should have been out. Your gut instinct told you should have been out. But emotionally, you're like, well, I need the money. I think it'll turn around, and you stay in. So ask yourself those questions. And if you answer yes to any of those questions, or if you answer, a negative emotion to how you feel, don't trade. I put dieting because this might seem trivial, but if you're dieting or if you're trying to keep a workout regimen, um, that causes you to have to go to the bathroom more frequently. So keep that in mind, because if you're going to be live trading or scalping, just know, like, okay, figure out your routine, trade in between, so that you're not getting in and out of trades at bad times and missing entries or losing out on money for no reason. So I mentioned set your risk earlier. So your risk should always be between 1% and 5%. You should never be risking over 5% of your account on any like at any moment, at any given time. So that's not just one trade. If you have 5 trades open and you said my maximum risk is 5%, each of those trades should only be a 1% risk. So keep that in mind. If you open up a trade and you're like, okay, I'm already at 1% risk management, don't look at any other charts, manage your trade that you have open. And then as your account grows, then you'll be able to put, different lot sizes and such towards a trade, and even keep that 1% risk management solely because your account is growing. Again, with setting your goal, what's your risk to reward target? So when I get on a chart and I look and I'm trying to figure out if it's a good trade or not for me, if I look at where I'm going to put my stop loss and I look at where my target is, if if the number of pips from my stop loss and the number of pips to my target are the exact same, I don't take that trade because that's a 1-to-1 risk to reward ratio. I only take 3-to-1s and better. So if my stop loss is like 10 pips, the target has to be at least 30 pips away before I'm like, yeah, I'll get into that trade. That's worth it for me. I suggest everybody on this call start at least a 3-to-1. 2-to-1 is kind of pushing it, because at the end of the day, you want to make sure that whatever trade you're getting into, you're making it worth your while. You want to make sure that every trade you get into is going to be worth your while. And 3-to-1 risk to reward ratios, that's the lowest like worth for me. It has to be better than that. So do your homework. So with doing your homework, that means knowing what pairs and stocks give you what you want. So I can't anticipate going into Euro USD thinking I'm going to get 50 pips out of Euro USD in a day, or even my 3-to-1 risk to reward ratio in a day. So know what pairs are going to give you what you want and what time frame. So if you say in your plan that you want a 25 pip goal, if you set 25 pips as your goal per day, Euro USD is probably not going to give you that because Euro USD only moves on average about 14 pips. Now, GBP USD could possibly give you that. GBP pairs period could possibly give you that, but there's a risk to that that's involved. And you also, as another part of your homework, need to know the risk. Those pairs are very volatile. The more pips you get from a pair or a stock in a day, the more risk that's involved. So if I'm looking for 25 pips a day, I know where I can go, but I also know that, okay, it's risky. I have to keep either a close eye on my trades if I'm at the charts, or I need to make sure that my risk management is in place. And I use the lower end of my risk management range, if I have a range on my trading plan, just so that I keep my account safe. I'm not going to go into a GBP USD trade and have an open stop loss. Like no one here should ever have an open stop loss. It doesn't even matter if you're sitting in front of the computer. No one should do that. I'm also not going to trade GBP USD with quite an open stop loss as what I would for another pair. I will keep my stop loss pretty tight. And if I lose out on that trade, if I get stopped out, fine, whatever. There's always going to be more trades. And then the fundamentals. Know what your fundamentals are before you get into a trade. So that's why I always show you guys the Forex Factory calendar and just give you a heads up as to what's coming out. You don't even have to know what it is. If it's orange or if it's red on the Forex Factory calendar and it has your currency beside of it, that just means you need to be mindful of your trades, and also be mindful if that's a time of the day when you do trade and you might get into a trade. So for instance, today, there was US news that came out. Had I not checked the Forex Factory calendar and blindly jumped into a trade, I could have gotten into a trade at a very volatile time in the market. I could have gotten in, done analysis, but not looked at the Forex Factory calendar. My analysis could have been great, but fundamentals, the news would have wiped me out. It would have caused my trade to hit stop loss, and then price could have swung back in another direction. Had I looked at the Forex Factory calendar, I could have said, okay, there's news coming out. I'm going to wait until after the news comes out, see how the market settles, and then I'll get into my trade. So that's the importance of us looking at the Forex Factory calendar. Like I said, you don't have to know what all of these items are. Just make sure that you look at the calendar, see what's coming out, and see if it's one of your currencies that's a high impact news item, which again are those orange and red folders. So after that comes being at your chart. So this is where you're actually looking at your chart, applying your strategy. So this is where you could possibly be marking support, resistance, your trends, whatever your strategy is. This is where you're applying that. Apply your strategy, look at your charts, and then after that, after you've put your strategy on your chart, or if you've looked at the chart and did whatever your strategy tells you to do, because everybody on this call trades different. So do whatever your strategy tells you to do, and then set your exit rule. So a lot of people get into a trade and don't know when to get out. Set your exit rules first, because it's easy to get into a trade when you know when you're going to get out. So if you know for a fact that your target is 30 pips, and you're like, okay, I don't know if the market's going to give me all that, but I for sure know that I'm going to try to gun for at least 10 to 15 of those, you can do a couple of things. You can set a trailing stop loss, which I will go over. You can also just put your take profit wherever you want it to be, and that's your exit. So whenever price hits that level, you're out. You're out with profit. You're not missing out on anything. You haven't hit stop loss, like you're good. Like you know for a fact when price hits that level, that's profit for you. Then set your entry rules, because when you know when to get out and you already have that established, now you just need to figure out when to get in. It's almost like watching people jump rope, like trying to figure out your entry. Like you know where you're going to be exiting to, you just got to figure out where to get in, jump around, do your thing in the market, and then get out. So set your exit rule first, then set your entry rule. And then the next step is to keep a trading journal. So you will never know how good of a trader you are if you don't set and have a if you don't set up and have a trading journal. So that can be online, that can be on your phone, that can be in a physical notebook, but you have to keep a trading journal, because it's not valuable to you to have placed trades and you can't tell me how many trades you've placed. You can't tell me what pairs you trade really well. You can't tell me what lot sizes work best for you. You can't tell me what times of the day work best for you if you don't have a trading journal. But if you have a trading journal and I come to you and I say, hey, like, when's a good time? Like, what's your best time to trade? You're like, oh, my best time to trade is like right at the beginning of New York session. I trade USD CAD, and I typically keep my stop loss, at this many pips. And I've done very well at a 0.05 lot size because it helps me to not get super emotional. Like you'll be able to tell me all of that having a trading journal. So, and no, I'm not sharing my screen right now. I will share my screen in a few minutes, but not right now. So with the trading journal, your history that you have in your MT4 or MT5 is your basis for your trading journal. So you need to be able to tell me the day of the week. You need to be able to tell me the time and session. You need to be able to tell me the pair, what your lot size was, why you got into the trade, how many pips you gained or lost on that trade, and what you felt like you did good, what you possibly could improve on. So you can put the monetary amount on that trade, if it was like one of your first trades that you did at a particular lot size, or you've perfected a strategy, or you felt really good in whatever type of way you felt good about that trade, you can write that in your trading journal, because that's going to boost you as you go back and review your trading journal after years of having it. You're like, man, I've come a long way. I'm doing really good. And you can feel great about your progress, because every trader is going to have that day where they get beat up in the market. And that leads me to one of my other points. It's like, never be overconfident and never assume that all of your trades are going to hit. And don't assume that you won't hit a losing streak, because your wins are victories and your losses are going to be lessons and your learning opportunities. And don't overtrade. So, when you have those moments where you feel like, okay, I'm not getting this strategy, or this isn't really working for me, or you're starting to self-doubt, go back through your trading plan. Go back through your trading plan and look at how you've traded over time. And that's why, even if it's small, write those positive feelings, write those positive thoughts about your trading in your journal. So then when you do have those days, you can go back and say, you know what? I am a good trader. It's just a moment I'm having. You can step away from the charts and review your journal, review your trading plan. Just take some time for yourself and then come back to the charts later. If you're feeling emotional about trading, again, like I said before, don't trade, because trading with emotion is the detriment is to every trader. It's going to be one of those things that's going to cause you to spiral out of control and blow an account. I can speak from experience, because when I first transitioned from stocks and options to Forex, it wasn't a huge jump, but there were certain things that were different. And so trying to remember the things that were different, and trying to remember time frames, and trying to just learn how to get into trades within a 15-minute time frame. I hadn't done that before. And sometimes it was discouraging for me. I was like, I don't know if I really like Forex or not. I'm just going to go back to trading options, because at this point I was doing way better. So I kept a trading journal. I looked back and I realized my mistakes. That's another thing a journal can help you do. Like, when you look back at your trading journal, you can see, okay, I rushed this trade. I overtraded this day, because I think I look back in my trading journal just to be transparent about my beginnings. I had placed 15 trades in a day. I was like, I know I got it. I know I've got this. I can get in this trade and hit my take profit. I was rushing it. And I was like, wow, I placed that many trades in a day. I really should have stepped away. And so, even for those people who are on the call who have been through my actual slide point, my PowerPoint presentation on building a trading plan and stuff, every couple of months or so, review your plan, review if it's actually working right for you, review it if you learn a new strategy. Just take time out to make sure that for whatever's going on in your life, that it's still working out for you. Because I went back and looked at my trading journal right before, when I asked you guys in the group chat earlier today, if you guys had a trading plan, I had just reviewed my trading plan and I was making changes to it. I hadn't changed my trading plan in about 6 months, but I was making changes to it because that trading plan no longer fit me. So definitely don't think this is like a one and done type thing. You'll always be going back and revamping this over and over again. So I know some of you are probably wondering, what are good goals to set? I can't necessarily tell you what to set, but I can tell you what's in my trading plan. I can tell you why I set those things to be the way that they are. So my risk in my trading plan is 2%. The range I gave you guys earlier was 1 to 5. Mine is 2. I try not to go over 2%. And I say try because there are days when I look and I'm like, ooh, that setup looks really good. And I'll place a trade and I'll like, you know, close my phone and walk away. I won't majorly over leverage. So like I'll still be within the 5% risk, but it's still over my 2% risk, which is in my trading plan. And I do that because I'm confident in my trading method. And if I'm going to over leverage, I set a super tight stop loss. And Mr. Levels has gotten on me many times about over leveraging my account, especially when I first started, because I would revenge trade. And when I would revenge trade, like let's say I lost like $10 in a trade, my next trade, I would bump up my lot size and try to get back the $10 plus some more profit. And if you do that, I promise you, you will lose more money. So you'll be out the $10 from your first trade, and then you'll be out the money from your second trade, which will be 2 or 3 times as much depending on what your lot size was. So just don't do it. It's easier to just not over leverage. But like I said, if I do place an extra trade, it's still within 5%, but it's over the 2% that's in my trading plan. So for me, that's over leveraging. A goal per day or per week or per month. You could set a pip goal. So one of my goals used to be like 25 pips a day. You could say, I want to catch at least 10 pips a day if you're starting, and then graduate to 20, 25, 50, 75. Just make sure that whatever goal you're setting is reasonable for your account size. So with that, the goal is to grow your account low and slow. So don't feel like you're going to be able to start trading and put in these huge lot sizes and get, hundreds or $1,000 days. It's going to start out really small. It's going to start out with you having like 50-cent days and $1 days. And then you're going to graduate up, start having those big profits. And in your trading plan, you're going to see that progress, and you're going to feel really good about the progress that you're making. So the other part about having a trading plan is that it's going to help you to stay consistent. So about 80% of traders quit trading in their first 2 years. And a lot of that is because they can't master consistency. Master being consistent. Your trading plan is going to be your ability and your way to stay consistent. So I've written my trading plan out so that if I were to give my trading plan to anybody on this call, you would be able to follow it exactly the way that I do. You might not necessarily, you might say, oh, I don't have your eye. I won't be able to see what you see on the chart, but you'll be able to know what I'm talking about. You'll be able to go to the chart and relatively find what I look for as a part of my strategy. You'll be able to know where to get in. You'll be able to know where to get out. Like you will know everything. And that's how your trading plan should be written. There should be no holes left in your trading plan. If you write out your trading plan, and let's say you want me or Mr. Levels or just someone to look at your trading plan, if they can't go to the chart, or if they can't do exactly what you have written on your trading plan and be efficient, if they can't do exactly what's written down without having questions, then you need to go back and look at your trading plan and think about how it's written, how it's structured, and make sure that any answers that you have or that somebody else might have, you put down. And the reason why I say that is because when you're emotional, when you have emotions like flooding through your mind, your adrenaline's going or whatever the case may be, everything, like there should be no doubt. There should be like no holes. There should be no room for you to try to wiggle into a trade that you shouldn't have been in. Like your trading plan should have that all mapped out. And you should be able to look at your trading plan, and your trading plan should help ground you in that moment. And having someone else look at your trading plan, or if you just know that you got it all down, like look at your trading plan one day and just go through it step by step and say, all right, if I were someone else, would I really be able to follow my trading plan, get in and out of a trade, and follow risk management, keep everything the way it's supposed to be? All right, so that's it for developing the trading plan. I have, like I said, the chart that I do and use for my time, the know yourself questions that I was asking and things I was telling you earlier about know yourself. Time management is one of those. That's the grid I was telling you about. So I'll put that in the chart so you can have a picture of it. You don't necessarily have to do one for every day of the week, but just take like your busiest day and just go through, fill it out, and just kind of know like what your life is like. Because honestly, you guys, like I stay on the charts a lot. I stay in front of the TV a lot and at the computer, catching up on everything that's going on so I can help give you guys information. Mr. Levels does it because he's trading, but he's also trying to, make sure that he keeps an eye on the market. When you're learning how to trade and when you're really trying to get your feet wet and trying to get out to the deep end, you really only need 15 to 30 minutes of studying. Like get those 15 to 30 minutes in, grasp that information, and then walk away, because you don't, to start, want to overwhelm and overload yourself with information, because there's so much information out there. There's so much to learn. There's so much to gain in the markets and from other people, but just keep it small. Keep it 15 to 30 minutes, walk away. All right, so now I'm going to show you, when I was telling you guys about pip goals and such, I'm going to show you something that I used whenever I first started. So I don't necessarily follow this anymore, just solely because I'm not trading actively every day in the market. And it gets kind of overwhelming to look at it and say, well, man, I should jump in the market so I can hit these next numbers. But you can form a spreadsheet very similar to this. Put your starting account balance into a spreadsheet, what you want your risk to be, how many days a week you want to trade. And then, you can form a plan like this. The reason why I stopped using this, another reason is it's so easy to scroll. So like this goes out to like 34 weeks. It's so easy to say, man, I can take a $50 account to like almost $600,000 in 34 weeks. But that requires you to be in front of in front of the charts a lot. That requires you to spend a lot of time essentially. So this is a chart. This will be something for someone who has that time. I could adjust the days to 2. And it would go through and change everything for me. But at the end of the day, what you really want to do is something very similar to this, but you don't have to make the goal so high. This is the problem. My daily pip goal was outrageous. Okay, I have to figure out. I think I broke one of the links because the amount's not changing. But like I said, something very similar to this. So it's not hard to go in and make one of these. So like I'll go ahead and tell you now how you can actually make it, show you some of the formulas that's in here. So you'll put your title or whatever you want it to be. And this was very aggressive because it was growing your account by like 50% every week. And you don't want to make it that high. You want to grow your account by like 5% at the most every week whenever you're starting, so you can actually enjoy trading. Put an account balance in here where you want to start, and then these risk management levels. So you're just going to, whatever is in your account balance, you just want to multiply that by, it's literally a pip. So this is 0.0001. So that's 1 pip. Low risk is 3, medium risk is 4, and then high risk is 0.05. So remember, the most risk that you're wanting to actually do on an account is 0.0, is a 5% risk. So you're going to do 0.005 for high risk. And that's the most risk that you're going to be doing on any trades. And whenever I tell you guys that this can translate to real estate, you can do the exact same thing with with home buying, with flipping homes. You know, set the number of houses you want to buy and flip, what's your goal, and the balance that you want to have at the end of a month, the end of a quarter. And then literally out of that amount, you're taking 10% and setting it aside. And that's what's going on down here. So essentially what you're doing is every week you're taking 10% of your profit and you're withdrawing it out of your account. So whenever you have your trading account, you know, you have a wallet that your money gets transferred to, and then you transfer that money into your actual live account. Well, let's say you make, in the example of this goal here, you went from $50 to $75. Well, take 10% of that out and leave it in the wallet. Don't touch it. If you're just on MT4 or MT5 on your phone, you won't be able to see it. But if you log in on your computer, don't look at it. Just keep withdrawing your 10% out every week into your wallet. And that money, in addition to your trading account, will grow because you still have 90% of your profit in the live account. So this will be a good way for you guys if you just want to have a template for how to create kind of a goal or a track for money. You can do it like that. But like I said before, don't do it if, don't do it for the money. Always do it for the pips. So whenever you do this, if you feel like you're going to get very attached to the money, which some of us do, just put the pips in here. Put the number of pips you want to end the week with and just write out withdraw 10% at the end of the week. And there was a question in here. That was why I quit sharing my screen. It wouldn't let me open the chat with my screen shared. So what I'll do is I will revise this so that the numbers aren't as strong, because I want it to be very reasonable. So for a $50 account, I would say reasonably, I'm going to make, instead of this being 26 weeks, I'll make 52 weeks the actual goal. So if you do better than what's in your trading plan, so like let's say you have a goal of 25 pips per day and you've made your pip goal and you're just sitting there looking at the charts, don't get into any more trades. You've already hit your goal for the day. What would be the point of getting into more trades? If you get into a trade and you make more pips than your actual goal for the day, but it was in that one trade, close that trade out and take the day off. When you hear Mr. Levels say, I'm not trading anymore for the rest of the week, it's because he has a trading plan. He hit his PIP goal. He's not going to trade anymore for the rest of the week. Like, he doesn't need to. Like, it's a matter of sitting back, watching everything else and relaxing. Like, that's what you're doing this for. Like, I'm gonna say this and I'm gonna go ahead and let Mr. Levels get started. Like, whenever, like, remember why you got into trading. Remember why you said, I want to learn Forex. I feel like that's going to be beneficial for me. Remember that. And for most people, it's time freedom. People want more money, more time. They want to be able to do what they want to do. So if time freedom is your goal, don't become a slave to the charts. Like, if you hit your PIP goal in one day, you got the rest of the week. Because think about it. If you hit your PIP goal in one day off of a 0.01 lot size, and you stay consistent and you grow your account size to $100,000, that you hitting your PIP goal in one day can be your weekly salary. It could be your monthly salary. Like, just think about it. Your consistency is going to get you to the point where your account size is going to help you bring in your salary. For those people who aren't working right now, like, your PIP goal per day, whenever you're trading, like, it's literally going to be like, that's all you're going to have to do is hit your PIP goal, and that's it. You're done. So that's why I mentioned consistency earlier. 80% of traders fail within their first 2 years because they are not consistent. Be consistent. So what if you only made $1 or $2? Make that $1 or $2 consistently. Make that 20 pips consistently. Making 20, 25 pips consistently and just upping your lot size, you're good. Because you know you can hit 20 or 25 pips. All you got to do now is just bump up the lot size to get the monetary amount that you want. But be consistent with hitting those pips. You're good. So I'm gonna work on fixing this spreadsheet. Because like I said, when I changed some of the numbers up here, they didn't change down at the bottom. And I'll put this a more revised version of it in the chat for you guys. And I'll let Mr. Levels get started now.
Cool beans, cool beans. Great job, Corman. Great information. Never fails to amaze me. Let's jump into these technicals, y'all. Midweek technicals. Let's get it. All right, cool beans. As always, we're going to start with the dollar. Why? Because the dollar gives us a outlook of the currency pairs that we trade. We know that our currency pairs that we trade, they go in the opposite direction of the dollar. So, starting out the week with the dollar, I told you guys that I was bullish the dollar, mainly because of the fundamentals back in the dollar right now with the stimulus and everything going on. I want to see short-term inflation, and so we started out the week to the upside. We came up into this imbalance that I have marked right here, these two levels. There's a level of imbalance that I had marked. And so the dollar was bullish up into that imbalance. And then we started to sell off. It's cool. Brings us to today. We open up after New York closed today for Tokyo. We opened up. Australia. We open up with this gap to the upside. So Now what I'm looking for from the dollar is to see this gap fill in. And as you can see, we're getting that right now as I speak. Let's blow it up for you guys. So what I want to see happen with this move, I want to see if the dollar holds this level. If we just come down and fill in the gap and then start buying to the upside. I do want to see all of this imbalance fill in. So we had to sell off. Price came back up into the imbalance, but it didn't fill it all the way in. So I want to see the dollar hold this level, fill this gap, hold this gap, and come back up, retest this high, and possibly retest this high here, possibly. So those are going to be my areas of interest going forward for the rest of the week with the dollar. So with that being said, let's look at our currency pairs. We got the sell off in the beginning of the week, but I did want to see it continue to sell. I'm sorry, we got the sell off all last week. In Monday, I told you guys that I wanted to see the sell continue to the downside off of the bottom of this structure. Because I was bullish the dollar. But we did break up through the structure, and now we're retesting. And now I want to see if the dollar holds the gap that is set right now, then I expect Euro USD to hold this structure that is set right now. And if the dollar do hold a gap and start pushing to the upside, then I want to see Euro USD go ahead and give me that sell through this structure and on to the downside that I want to see. Let me look at this on a daily time frame right quick. Check something out. All right. So matter of fact, so yeah, Euro USD may be setting up for a beautiful sale, like Corman stated earlier. Of course, I'm not in the market. I'm done trading for the week. But if I was in the market, then I would, based off of fundamentals and looking at my technicals right here, I would be expecting Euro USD to sell off of this level that is set. That's if the dollar hold its current level. Yeah, I like that. So the only thing I'm really concerned with is the imbalance that we see here. Price very well could reach up into that imbalance. Yeah, but I'm gonna see if we hold this level. And if we don't, that's all good. We'll just know if price do break through here, we can definitely expect price to reach up into this imbalance. And maybe come in, give us a retest of this order block right here, this engulfing candle, and then give us our move to the downside. So that's what I'll be paying attention to for Euro USD going forward for the rest of the week. Um, Looking at GBP USD, same thing. We had our good sell off last week. I told you guys Monday that I wanted to see the sell off of the bottom of the structure. Uh, Gave us a few pips, pip and dips, break evens if you tried to hold it. And then price got above structure, as you can see, came back, retested structure, and started to push to the upside. We do see price coming up into this imbalance. Um, I definitely expect GBP to reach up in that imbalance at least to the halfway mark. So yeah. And so yeah, I expect GBP USD to come on up in here. Give us a sell off of this engulfing candle, similar to Euro USD. So looking at NZD USD, same thing. We wanted to sell. We got some pips and dips, break evens, and now we back above the structure. So same thing. Definitely got my eyes on this imbalance right here. Want to see price come up into the imbalance. And if the dollar continues to push to the upside, then we want to see NZD continue to push to the downside. So let's look at our metals. Checking out silver. Got a good sell opportunity beginning of the week off silver. Um, Now we see we are trying to push back above the structure. If we do push back above the structure, of course, we would just take the buy off of the structure to the upside up to the next structure. Um, Matter of fact, to this structure here, that would be my first take profit, and then this structure would be my second take profit, and so forth and so forth. But with me expecting the dollar to keep pushing to the upside, I do expect to see metals push on down. I never got price to retest my $24 level on silver, so I still want to see that retested. Don't mean that it's gonna happen this week, but don't mean that it's gonna happen at all. So right now I'm just following price action. Moving to gold. Gold gave us a sell opportunity, beautiful sell opportunity, beginning of the week. Now we're back above the structure. Same as with silver. And so gold might go ahead and push back up to 1775 because gold do what it want to do. But I do want to see gold get back below the structure. So let's see if gold can break back above this structure right here. And if it can't, then that'll be an indication to me that gold want to go ahead and continue to sell to the downside. Looking at oil, yeah, caught this buy for oil. We've been knowing that oil was going to buy just because of everything that's going on in the economy right now, and we dropping bombs and stuff. So y'all know what time it is. Oil prices going up. They should continue to rise. Um, Moving on to my baby girl, U30. Of course, y'all know how I trade U30. I've been teaching y'all the time and price strategy. It's a method that I use, a method that was taught to me by my mentor, Michael Huddleston. And so I've been going over that with you guys, giving you guys the game. And so let's get into it. So time and price, we know that time and price gives us our setup between London 2 a.m. to 5 a.m. And most of the time, not 100% of the time, but most of the time, 90% of the time, whichever direction that the market is going during London session, 90% of the time, that's going to be the same direction that the market goes in during New York session. Not 100% of the time, but 90% of the time. So you are going to lose using this strategy, but this strategy is 90% accurate. And so let's look at it. So if we look at from 2 to 5 this morning, and if y'all look at the group chat, I think I sent out a time and price message in the group chat this morning at like 3:58. And that was just like heads up to like let you guys know, all right, this is when you should be looking for your setup. And so as you can see, we're on the 2 o'clock candle here. This is London open, which is 3 a.m. This up candle, that's London open. And this is 5 a.m. right here. Now, I want y'all to understand that it's not cookie cutter perfect. So you're not going to see like the perfect setup. You have to train your eye to be able to recognize excuse me, to be able to recognize what price action is doing. And so if we look right here, two a.m., 5 a.m., and then we look at London open, we see price pushes up during London open. The 2 o'clock candle was an up candle, was a bullish candle. Price keeps pushing up. London open, bullish candle. Price keeps pushing up. 5 a.m., we see price pulls down, but doesn't break back below the London opening candle and continues to push up. Now, you didn't even have to be awake this morning to see all of this going on. You could have woke up around 8 o'clock. You could have woke up around 9, right before New York opened at 9:30. You didn't have to be up to see this, but when you woke up, you would have been able to identify this and see that, okay, the market was buying during London. And with using time and price, I know that 90% of the time, whichever way the market was pushing during London session is 90% is a 90% chance that it's going to be pushing that way during New York session. And so when is New York session? 9:30, New York open. Look at that candle. Just that candle by itself, 1,400 pips. And you didn't have to be risky and say, okay, the market was going up London, I'm just going to automatically push the buy button during New York, because Mr. Level said 90% chance that whatever direction it was going during London is going to go that direction during New York. You didn't even have to do that. You could have let the market do its thing, open up, show you what it want to do, because the market talks to you. That's what price action is doing when it's moving. It's talking to you. It's giving you hints. It's giving you indications of what it wants to do. And so this New York opening bell, you seen the market tell you what it wanted to do, confirming the time and price action from London session. And with that, when you get this pullback here, what does price pull back down into? Ooh, one of your levels. And we know that our levels do what? They stay relevant. They hold their relevancy. And so this was the imbalance that we had, that we sold off of. And then once we see price break through that, look how aggressively price broke through that, confirming time and price from London session. It breaks up through there aggressively, comes back down, retests your same level perfectly. This is your entry, even if you didn't get in at New York Open. You see the pullback, you know price action during London session. You get in your buy, you set your stop loss below the previous low, and you let price run. And that was an easy 3,000 pips. Easy. If that ain't a weekly goal or a monthly goal, I don't know what is. I mean, most people got 100 pip weekly goal, 200 pip, 500 pip. I don't know, however many pips you want. We handing them out over here. So, study this material, because I'm literally giving you the keys to the game as the keys was given to me. And so now I'm just monitoring price action, not really caring what price do. But I'm monitoring price to see what we're going to be doing for the rest of the week and going into next week. So with that being said, I'll stop my share. Um, I don't think Vic is here tonight. Is Vic in tonight? If Vic's not here, I'm sorry, Ghost. If Ghost ain't here, Ghost ain't here, Ghost ain't here. Yeah, Ghost ain't here. So I start the recording and take any questions.